Everybody buzzing about the stock markets around the world. This a live look at the New York Stock Exchange big board. The Dow back up over 16,000, climbing 250 points in less than 2 minutes of trading this morning, trying to erase what was a 588-point loss yesterday. We'll keep an eye on the markets throughout the morning. But now we want to talk to the CEO of the Institute for Wealth Management, Matt Medeiros, and talk about what is going on around the world. Obviously unsteady times. But we'd seen China's impact mostly being blamed for the drop around the world. And today it seemed like the European markets and maybe the American markets might be uncoupling a bit from China's problems.
I wouldn't necessarily say uncoupling as much as I would say that they're trying to understand China and what China is doing. China today lowered their overnight lending rates. They reduced the rate to another 50 basis points or 25 basis points on the overnight or the 1 year actually.
But China did drop again today, but it seemed like
Yes.
other markets, some rebounded well.
Some will rebound well. I mean, most of these countries that if they understand that China is going to be doing a little bit better in infusing capital into the markets, then they will continue to import things from other countries that will help them as well.
And I know a lot of people, they just have their 401ks. They may not even check that often. What is your advice to investors? And I'm sure it's different depending on where you are in life.
Yeah, I would say, Kim, that is an important thing. A lot, like as Thomas pointed out earlier, I think when the market's bouncing around like this, oftentimes your first reaction is usually the wrong reaction. So if you can stick it out,
right.
Ride it through. But frankly, a lot of this stuff you don't want to react to.
All right, so are things going to settle down anytime soon? Obviously, these are difficult times for investors, whether it's up or down. This much movement doesn't make anybody really happy.
I think this feels a lot to me like 2011 when we had some issues as well. We had the potential expiration of the Bush tax cuts. We had double-digit unemployment. We had a tsunami that hit Japan, and in 45 days the market went down 20%.
Right.
And then within another 25 days, 30 days, the market went back up.
So is the old rule still true? Like if you wait long enough, things still settle out? They used to always seem to be that was a rule that you could follow.
It does, but I mean the severity of the moves is really what's important. If you look at the 2008 and 2009, that's a lot to come back from. So when the market goes down like it has just in the past couple of days, that type of thing you probably want to ride out a little bit. 2011, again, if you took a nap and didn't wake up for 2 months, you would have been okay. You wouldn't have seen anything happen in the marketplace.
Well, we'll see what happens today. Matt, we always appreciate you coming by, visiting with us.
Pleasure. Thank you.
We appreciate
Matt Medeiros
it.
joining us here on Daybreak. Well, today we're expecting another emotional day at the Aurora Theater gunman sentencing phase.